Good afternoon. Welcome to OptionsTender. It's Monday, August 4th, 2025. We're taking a look at the higher time frames, and we're going to go all the way through the usual daily analysis with the weekend kind of attached in it since I didn't do a public video. So we're doing this intraday about 2 o'clock, 2:12 p.m. Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube supporter. It's 99 cents a month. It's truly appreciated. And then if you want more detailed individual analysis videos, that's $4.99 a month. So we are looking for a lower high, and you'll see that in lower time frames. And let's just go ahead and kick it off. We're looking for this change in character that has to do with market structure. Like I said, we're looking for a lower high. We're going to look at the monthly and the weekly candles here to show you exactly what's happening on the higher time frames and why I think the top is in. There's always a chance of making a new high after a correction, but we're going to be looking for a lower high on multiple time frames. And that's where the question is really, did we just top, or did we have a shallow correction for wave 4 and going to wave 5, or an A, B? And I'm not going to get into this semantics of that, but do we have another high coming after a correction? So our options expected move is about 108 points to the plus side or minus side this week. And, I do think we'll probably hit either one and or the other. And we hit the lower edge last week, and we're getting our bounce. So we expected this bounce. We virtually went, I don't want to say that we necessarily hedged for the bounce. We took profits on puts and really layered in some calls. And today got out of most of those calls and layered back into puts. So I don't trade just a clean, necessarily puts and calls only. I kind of move into a more bearish or more bullish position. So we're certainly back to bearish just for a day bounce. And then I'll show you on the low time frames on the 65-minute, the two kind of situations that I think could happen going into the rest of the week here. So there's your options expected moves. I do expect this to be an A wave. I don't know what kind of correction. We're looking for a big correction here, whether it's sideways or if it's in price. And if you look at this in hindsight, the 2000 top and the 2008, then you know that this is an A wave, a B wave, and a C wave for a flat pattern. So I'm going to call this the A wave. Maybe it's a triangle that we do. We're looking for the A wave to start. So that's our primary scenario. And then our intermediate would be that we're just starting off in a wave 1 to the downside right now. All right. And that's assuming the bearish position that I think we're in. And then the alternate scenario is that we're just correcting in a B wave of and one more wave to the upside, being that blow off top, an expanding ending diagonal. Okay, so let me close this up and let's check out the usual. If you're new here, we've been eyeing this for months and months, the 1929 2000 top here, and we're forming another top as we speak in 2025, and maybe double top if you want to call it that, but we rejected off of this confluence here from 2008 to 2022 up to 2025 as well. So let's go ahead and zoom in there, and you can see the rejection that's happening. We're back testing right now, and I don't think we have much more to go to the upside before reversing. Now, I did put this 62%, this line up here. Oftentimes, see, I'm counting this as a 1, 2, 3, 4, and 5 for an expanding move here. And oftentimes when you connect wave 1 to wave 3, you get the full length, and you go and measure that off of wave 4, you get a 62% extension. And we missed that by a couple of points, about 50 points. So is that unfinished business? I just want to point it out. I'm not sure that we're going to get up there because of these trend lines, but we'll see what happens. Okay, so here's your moving averages. We're in a bullish posture. I do believe that we talked about this in a weekend video for members. The 8 EMA, I think that's the easy trade. I think we get down to the 8 EMA, and then we figure out if this is just a correction and one more high, or if we start to break down levels at that point. So you should see a reaction off of this 8 EMA, and that's around the 6,000 area, and you'll see why that's important going into the rest of the video. And here's our DMARC. I believe we're probably on is it a 3 count? Yeah. So 1, 2, 3. I'm not sure this is going to last if we start to reverse from there, but we have a 3 count so far. Here's our setup. We have negative divergence here. If we roll back over, then we'll have a confirmed bearish rollover here. And you'll see that with a red histogram. So far, we're still green. We have the negative divergence in RSI, and we want to see the slow stoke roll over. So you see the buying pressure is still to the upside. It's going to take a while for that to roll over. This is a monthly time frame. Okay, let's go down to the weekly. Here's another look at this, the 2008 trend line here. So we spiked through it, kind of trying to hold on here. We're just kind of trading through it right now. So let's see what happens here. We have an inside week, and you notice that big red bearish engulfing candle. That's very bearish there. I don't know if that will actually go through an inside week here. I do expect some continuation to the downside. And our first area to look at is really the top of this consolidation area. This is a consolidation zone. The top of there would be about 6,100. If things start to ramp up a bit, you always have the middle where there's a lot of trading being done, and you'll see a volume node there, and you can see where price reacted to that middle range too. And that happens to be our 6,000 area. Okay, so a volume shelf here. And I would suspect that we get a bounce at that point. So let's look at the moving averages. We already saw that the 8 EMA and the monthly lines up with this, but on the weekly, they're still a little bit lower. We're trying to get that 20 crossing over the 50 right now, and that's starting to head up. The 8 EMA momentum is still up. You saw we got the reaction. I don't think it actually touched it, but you see we got the reaction off of the 8 EMA on the weekly, and now we're getting a bounce. So that's I mean, clearly what's happening right now. And since we're live right here, so we'll see what the next level is. Again, 6,000. And if price really gets crazy, you have about 5,900 here where these other moving averages come in. You can see that's where former resistance, now support is. So let's go down to the daily. Let me pause it, and I'm going to change my setup. All right, so here's the setup that I usually do on the daily time frames, and we're just taking a look at this. There's that the 1929 setup here in the turquoise, and that's the 2008 in the purple. And we broke down from there. We had a nice big gap there, and we're starting to close the gap. We're not quite there yet, but we did have an island gap on the lower time frame that we closed already. So this could easily just be a gap up, and we could have, maybe we get a little doji indecision tomorrow. It doesn't have to. We could completely tomorrow continue to the downside, but there are higher retracements here, and you'll see those in a little bit. So let's go ahead and look at the moving averages. All right, so this is our first clue here on the daily time frame where we're underneath the 20 moving average. We gapped underneath, and now we're fighting with that 20 and the 8 EMA. So we don't have to go any further higher. Okay, it is possible when you come up to the moving average that you kind of spike through. That's possible, but we don't have to. So I already layered into a lot of our swings. And if we go up just a little bit further, we're going to add into those. And we still have some calls in the very near term left. So those are much more sensitive and will appreciate much faster the calls that we have this week, expiration, compared to the expirations that are way out further for the swings here. Now you see this former all-time high here. That's around that 6,100, and that goes along with the 50 moving average. So likely we'll see a reaction there. But if this truly is the beginning of a 5-wave impulse move, and every impulse move starts off with a zigzag. So I do love that saying. That's not mine. So we're always looking to trade the 3 waves, and then we'll see if we get a 4th and a 5th. But if we only get 3, it's possible that this is a correction, and we'll get a bounce, and we'll probably have a larger correction for an ABC. But at this point, we're looking at this as being a 1, a 2, or an A and a B going into these moving averages here in the 6100. So if we get a reaction off of here, I think it might be really likely that this is a corrective move if we get a significant bounce off of this point. If we continue to break down from it and maybe close some gaps here, now we're talking that 6,000 range that I was talking about, and maybe we consolidate for a little bit and then come down to the 200. That would be an ideal situation where we're probably seeing an impulse wave into this consolidation area, into the 200 moving average and the 100 here. What news with it? I don't know. Some sort of news would say something, but I read charts, and the charts is telling us a setup is happening right now, and I just don't see any upside from here. Let's see what happens from the moving averages. Our trend is down right now. I know it's barely, it's just changing character, but our trend is down and our momentum is down at this point. So just be careful if you're in that buy the dip mode here. McClellan oscillator. So we're looking at the oscillator, very bearish. We're starting to get that bounce. I do think we continue to move down here, or even create positive divergence. But if we're only in a wave 1, then we should see, a couple more moves down. But we'll be monitoring this each and every day to see when we should, kind of lay off those put positions. Now, your wave 1 into wave 2 is usually a sharp retracement and a sharp bounce. So that's why I was able to add on those calls. We know that there's buyers there, and if this is a wave 3 coming in next, you're not going to have a big bounce for wave 4. So you no longer start to try to play those at all. We just kind of ride through it, or take our profit and leave it alone till we're ready for wave 5. All right. And let's go ahead and add on, since we don't have it in this setup here, let's do the McClellan summation, because that's what we do in our weekend analysis. All right, so here's our summation index, and we were pointing this out that we had negative divergence here on the summation, and we're starting to roll over here. So let's see what kind of continuation we get as we start to sell off a little bit more. And with the trend to the downside in this, we should be able to start to tell whether this is a correction down to 6,000, we start to make new highs, or we bounce off of this bull bear territory, or we break through it and we continue lower and this correction continues to go. All right, here's our MACD, negative divergence all the way through. You see how long that divergence took place here. A very long time, being very patient with that. And we had the RSI completely roll over into oversold territory, and that's where we're getting a bounce. We don't have any positive divergence or anything like that. So when we start getting negative, it's not typical that we'll spend much time above 50. Okay, if we're in a trend, wave 1 should continue to be lower here, and maybe see some positive divergence into a larger wave 2 after we make some new lows here. So again, we'll monitor what's happening there. The slow Stoch is already cycled all the way through, but it can continue to head lower here. All right. Let's demark. Now we're starting a count to the downside. So let's see what happens here. We have 1, 2, 3, 4. I want to see a nice 9 count here, or possibly a couple candles after that 9 count, but I'd like to see a beautiful 9 count to the downside before looking to go long again for a bounce. Awesome oscillator, starting to roll over. Let's go to SPY so we can check out that money flow index. Money flow index, accumulation and distribution. Finally, like I said, just like the negative divergence in the MACD, took so long and took months there. And we had this consolidation here. Price action got tight. We finally broke that formation here. So we're on our way to the downside. This is distribution. I do think we're going to cycle all the way down. So let's see what happens down here before we start to look for any bounces, real bounces. Now today we took that quick call action, but that's pretty much done and over with right away. Bollinger Bands got near the bottom, and now we're just testing a top here. Sort of a tight price action. Let's see if we can bend those bands to the downside and push very much like this. Now this is very sloppy with this candle action here. I don't expect the same thing. Volume. Let's see if we have any volume going on here. All right, so we have a volume shelf that we'll be looking for. First of all, let's start off with here. You see that we had the volume, we held that, we're getting our bounce off it. Now we have a gap. If we break down from there, we should pretty much go all the way to that 607 is where it starts, but the most volume is right there. No coincidence, 600. It's right at that 600 point. So we'll be looking for some sort of reaction at 600. That's the middle of this trading range right here. And you'll see that's right where you get a little bit of price action. We thought the top might have been in right there, but then we ended up holding on to that and getting an extension. And you see that it's important because we gapped over it too. We gapped over 600. All right, so very good looking volume shelf there. Elliott oscillator. We had our divergences happen here from wave 3 to 5, from wave 3 to 5 on a higher degree. All right, and this is now playing out. All right, and just to give you a quick look, again, if this is the top, then we are looking for our wave 3 to come into that 600 range here. Now, all that said, we're looking for a wave 1 total to happen, and then we'll get a wave 2 bounce, and then we'll look for wave 3 to go much, much lower at that point. But we're just in the beginning of, if this is the bear scenario, just in the beginning of it, the infancy. Now, if it's a, I should have went over that in the 65. Sorry, let me go through on the daily time frame. So with a reversal here, we're looking for some sort of top to be in as wave 5, or because this could be just done. Here's our expanding ending diagonal. If you're new here, they're all done in 3 waves. Wave 1, wave 2, big old wave 3. Wave 4 is bigger than wave 2. And this possibly, if this plays out where wave 5 is bigger than 3, then we need to get a larger correction here for a B wave, and then get some sort of huge move to the upside that's probably equal to this one or more. All right, with an expanding move. I think that's less of a chance. So that's the white where we're looking for A, B, and then C wave to the upside for an, and I move this 5 all the way up to the targets that are near 750 or so, 700 and beyond. But as a initial move to the downside in the purple, that would be our bear scenario. 1, 2, and we continue to move lower at that point. Alrighty, so now we can go down to, let's check out VIX. See what the VIX is doing. I think this is a huge clue on what's happening here. So we had this wedge breakout. We back tested here and started to really move. And I left this trend in here because price is really respecting it. We did break down from it and consider that a fake break. We're above it. And now look, so we might get our reversal to the upside on the VIX right back at this trend line. Okay, which worked out really well in the past. So let's see if this acts as support again. If it comes back even further, then it's clear that we're back testing the wedge. But I don't think we're going to make it that far down here. And I still think we're in this rising phase here. So once this is done, I think we'll have a dramatic drop into this range here, into this cycle, dominant cycle low, which is the middle of August. It's not that far away. Okay, and that's a range there. Could be August 15th or so. So let's look for this to continue higher. That's how I'm interpreting it. Others who are bullish are probably looking for maybe this high is in the peak for the minor cycle, and now we're in this falling phase here, declining phase, and we get new lows going into there. So if you're bullish on the market and you think it's going to continue and we're done with our correction, then that's what that should look like. But if this holds here and we continue higher with big moves in the VIX, maybe we push it to next week or so, and we really have a dramatic fall going into this lower phase. Now, it doesn't mean that we have to make new lows. I know I'm pointing down here, but I'm just pointing at the cycle. So after a move up, and then we get we break out to the 30s or wherever 40s, and then we get a dramatic pullback, maybe back to the 20s here, and then we continue with the rising phase of the next cycle. Okay, that's how I'm interpreting it, since we already had our breakout and such. Okay, let's go to SPY on the 65. And so that's where we had our top situation here. Now we're making it, so here's our initial move down. If this is a top, then this is, I'll borrow, let's see if I can find that wave one. Yeah, I'll borrow this. And we have our wave one down. And I'm going to borrow this wave two. And we're looking for wave two to end. And that could end, it can end at the 50%, but it's not very typical for the wave two unless you're in the momentum's to the downside more. We still have buyers. People are still looking for new highs. So this should be a nice sharp. That's why the character's here. And then we'll close the gap around the 62% retracement. So I think it's much more likely that we hit the 632 here. I don't know if that's exact to the penny, but 632, so approximate. And then we have our wave three down to the 162. And if we make it past this 162, it's just much more likely that we are in a trend change. So that's something in an Elliott wave analysis for your wave 3 or C. If you start to move past, nothing's a certainty. You move past this 162 in that wave 3, it's more likely we're going to have a wave 4 and 5 for a trend change. And then we get a larger bounce after that. So let's look for the reversal right around here this week at 632. It's not unheard of to go to the 786, but it should not go much deeper than that in itself. 635 is the 786. So, but we'll add on to our positions here, and we'll take off all of our hedges pretty much in this zone. We took off the majority of the calls lately. Now they're just considered hedges because my call positions are much smaller than my swing positions to the downside. Now this is projected as if we're from the high to the low, and if we only make it to the 62% retracement. Okay, so that's where that's projected. If we do go deeper into the 786, you see how that moves there, then our target's 602. So I'm expecting the 62, and so that's where I'm going to keep it. It's not the exact number, but it's around 600, just so happens to be, and that's where that gap is too. Okay, and now the other scenario is that we're going to go higher, right? So by the way, let me show you. This is something that I pointed out to people in the Discord, our traders in the Discord. We had this wave 1 into wave 2, and we had wave 3 here to that 162. So I don't, yeah, I mean, that could be a coincidence, but I'm looking for this. So this possibly, and this isn't one of my scenarios that I'm pointing out, is only the wave 3 up here, and then you get wave 4 and wave 5. So that's just something to keep in mind. But I think the top is likely in. So here's our wave A scenario where that's complete, and now we're going into a wave B. So let me change the name here. So wave A, I think, is complete. And so if we are bullish, then we're looking for a B wave to correct into. And that might look like this. It might be an A into the 23.6, get a reaction off of this, some sort of B wave. And then we get a correction all the way down here to the 582. Okay, so the reason why these numbers are here, I don't necessarily think this is the case, that wave 2 is at this point. I think is more likely to be here, but I just want to have benefit of the doubt here, just in case we do make it down that far, even though I think the reaction is likely off of that 600 or so. But so this, I think, is more likely to be here. But that still leaves it open for 590 too, also. So just keep that in mind. It could be both spots. It's a pretty big range that leaves open, but I just I don't want to be so bearish that I lose sight that any bullish scenario can play out. So we'll be looking for it, and that takes us into the lows here, and also the low part of this consolidation area, and the beginning of that gap. So we should see a reaction here either way, no matter what happens. So let's keep this open mind, that there's an A, B, C here, that we get a larger degree correction. And I'm calling it B. You'll see other people with a wave 4 in here. And a B wave will not be, it can go all the way down to the lows, technically. But here's the 50% as well. And so I'm keeping, the scenario does not end if we continue to go further. All right, it just, our probabilities change. So this B wave can make it to the 50% too, and we continue to move much, much higher. So we're going to keep these scenarios here to keep us in check. All right, that's what I'm showing you. VIX, we can take a look at that on the 65. Let's go ahead and end this video, and we can enjoy the rest of our day. I'm evacuating a car right now, the air conditioning. So this is a better view from the 65 from this falling wedge. We might not even close the gap. Some people say the gap is closed from the wicks here. I go from the close, from the body. So that's where my gaps are. But this might make it down to the wicks, and people call the gap closed, and it's also a back test of the wedge here. So let's keep an eye out for that. And we have a new gap up here. I'll add that in later. All right. Thanks for joining us here at OptionsTender. Have a wonderful day, and we'll see you tomorrow.